Hi everyone, my name is Sharat. I'm part of Signalz team and happy to have you all in this webinar. Today's host, the facilitator is Jeet Bhayani. Jeet is actually MBA in finance from OP Jindal University. He is also a SEBI-registered analyst and he has been offering his strategic investment insights and personalized recommendations for his clients for more than 5 years now. He's specialized in optimizing the portfolios and various segments of stock market, and he also runs the firm with the name Foxers Financials. He actually had one other webinar a couple of weeks ago, and we had a good Q&A session, and various questions were addressed by Jeet. So for today's session, Jeet is going to cover a topic: golden roadmap for investing easiest way. So basically, here is going to help audience to filter out stocks, without much fundamental analysis and save a lot of time. And he is going to explain or discuss about how exactly one should approach this kind of analysis, fundamental analysis. So I will hand it over to Jeet at this time, and once he completes his topic, there would be some question and answer sessions. And just to remind you, those question and answer sessions not just limited to this topic alone. And if you have any other general topics, general points that you want to really ask or get a clarification on, you can feel free to answer them as well to Jeet. So with that, I would like to hand over this to Jeet. Jeet, it's all yours.
Thank you very much, Sarat sir, for introducing me to the panel and to the all the audience. Hello, everyone. My name is Jeet, and the first thing I would like to ask that is the screen visible to you all? The presentation part, is it visible? Can you please type Y in the chat? Okay.
Yeah, I think people can hear. People can see. Yes, go ahead.
So the today's session is organized for most of the people who are planning to invest in the market for the longer period of time, and this is quite important from each and everyone's perspective because when we want to filter out the stocks, the main disadvantage which comes up is looking towards the fundamentals. There are huge number of fundamentals, and we cannot use each and every metrics to understand that if a particular stock can give you returns or not. And many of the people don't want to cover up the fundamental analysis because it is a very big and long process for each and every individual as well. So the main objective for this webinar is to shorten up the burden of fundamental analysis. I will be showing you a small roadmap which will easy up your task to do fundamental analysis in a very shorter way, and it will save much more of your time. And it is an appeal to each and everyone in the particular webinar to attend this session till the end, so that I can tell you one important thing for you, which is a very good particular resource for you as well to look up the fundamentals at a one single place and not finding it elsewhere. So let's start. If you are ready, please cheer me up with yes in the chat box. If each and everyone is ready, please cheer me up. Okay, great. Okay, let's begin. Let's begin the webinar. So the first thing is me introducing myself. My name is Jeet Bhayani, and I've completed my MBA as Sarat sir has told you. Our trades and Foxes Financial is also engaged with the media team in CNBC TV 18, StockWits, MSN Investing.com. All the post and the analysis which we give to the public gets featured on that on a daily basis. So this is one of our analysis which we have given on here. So what should be the roadmap then? Let's begin with the main topic. What should be the roadmap? So this is the particular roadmap which we are planning to cover it up in this particular session. So the first part is selecting industries within minutes. So as you know, there are 45 plus industries in India, and it is not possible to analyze and invest each and every particular industry. And we have to select some of the top performing industries. But from those 45 industries, it becomes quite difficult to select a particular industry for investing. So I will be giving you some small shortcut in this webinar that how you have to select the industries and what are the important parameters, the 2 to 3 parameters which you will be using and knowing it so that you can filter out those industries based on those parameters. Secondly, after choosing the industry, we have to look forward towards the value chains. What are the value chains? If I talk about the automobile industry, there are multiple value chains. For example, the first value chain is four-wheeler, the second one is two-wheeler, the third one is passenger vehicles, the fourth one is commercial vehicles. So these are the small diversified sector into a particular industry, but we don't know which sort of value chain we have to analyze it. So I have also filtered out some of the metrics so that we can engage in analyzing those value chains, because from these value chains only we will be filtering out the particular stocks which are serving this value chain. Okay. The third one is listing all the stocks categorically. What is categorically? It means that you have to filter those stocks based on some parameters. For example, if you are using three categories, the first category is large cap stocks, the second category is mid cap stocks, and the third category is small cap stocks. These categories can be different according to your perspective as well. It depends on how you filter out the stocks and list those stocks. The next part is looking towards the important fundamentals. There are one of the basic fundamentals which you should watch while selecting the selecting the stock to invest. And after looking towards these fundamentals, the final part is entry and exit points, which we will be using through technical analysis. Technical analysis is, I think, one of the most important parameters, so that we should enter a stock in a particular right price and set the targets for the long. So let's begin. The first parameter to select an industry is CAGR. What do you mean by CAGR? It means compounded annual growth rate. It means the one particular industry growth rate metrics, which will be compounding on a year-on-year basis. So the more the CAGR, the more the particular stock will become a multi-bagger. So there are 45 plus industries, but you don't think that each and every industry will grow on an equal basis on the year-on-year. Okay. So there are only few industries which have high CAGR. We have to filter out them. We don't have to calculate the CAGR. We just have to look towards the metrics. And by the end of the session, I will be showing you one website which will have all these data in a cumulative way and in a compounded way, so that you don't have to go elsewhere. So CAGR means the growth rate part, the part where you have to analyze which industries will be growing in the future based on different parameters. So CAGR is one of the most important metrics to keep in the mind. And from these 45 plus industries, you will be selecting just 5 to 6 industries which have the highest CAGR. The question which will be coming up in your mind as of now is that how we know we have selected the right industries and what's the chances of CAGR projections getting right. So the answer is that we never know that we will be right or wrong. But investing in the stock market means taking risk, but not blindly, being it calculatively. So calculating a particular risk will hedge your risk, and it will help you to boost your returns. So what you have to do is you have to select and divide those industries into two parts. If you are, as I told you before, you have to select 5 to 6 industries. After selecting those 5 to 6 industries, you have to see that all these 5 to 6 industries, at least 2 or 3 industries should have the link up between each other. What do you mean by link up? For example, there are 1 or 2 industries which follows a similar pattern in growth. For example, if I talk about the COVID-19 era, when the COVID-19 hit the Indian markets or the global markets, there were 2 sectors which were drastically falling out. What was that 2 particular sectors? Can anyone tell me? In the time of COVID, which of the sectors were falling out much more larger than any other sectors? You hit the right thinking. I think you would be able to answer it. Anyone with the answer? Any 2 sectors which were hitting down at the time of COVID-19? You can give it a random try as well. Automotive. Okay. We are getting the answers. Automotive. Okay, I got the correct one. Now, got the correct one. So if you think it in the right way, you can see that tourism sector as well as hotel industry. These 2 particular industries were the industry which follows the same amount of same part of value chain. Because if hotel business grows up, tourism business also grows up. When tourism business grows up, then hotel business also grows up. So in the time of COVID-19, where there was an entire lockdown in the global markets, in all the nations, these two industries were the top industries which hit a very good setback. And after that, where all the lockdown reopened, where the economy reopened, these were the two industries which showed a very great recovery from the downside. So that's the reason you have to know that when you are selecting industries, you have to see towards the link up between the industries. If I talk about the cement and steel are two different industries. But if I talk about the top head industries, which is infrastructure, these two industries are quite linked up on the basis of infrastructure. If there will be a growth in infrastructure, there will be growth in cement stocks, there will be growth in steel stocks as well. Okay. So I hope I have cleared this point with you. So continuing further, uh, let's move forward. The second one is capex by institutions. Now remember one thing: there are many institutions which keeps on investing on a particular industry on a quarterly basis or yearly basis. Okay, what do you mean by capex? Capex means capital expenditure. In order to have an expansion in a particular industry, it is quite important for each and every institutions to put up the money in a particular industry to boost the expansion and return. There is a mindset between the investors that they never want the dividend. Why the investors don't want the dividend? Because dividend comes from the part of profits. The investors will prefer the reinvestment of a particular money in a particular business rather than having a dividend, because a particular investor always wants a long-term growth rather than short-term dividends. So what he will be doing, he will keep on investing till he gets the good amount of return in the future. That's what investors and institutions follow. What they do as they drive the CAGR and expansion in the industry, and what they do is they do capital expenditure on a quarterly basis. Remember one thing: each and every industries, there are very huge room for a growth, but that growth is only possible when you keep on investing money in a particular industry. Okay, for example, if I talk about the renewable energy sector, India is planning to move ahead in the renewable energies, and as compared to the other global nations, they are planning to increase in expansion of that global energy. For boosting the renewable energies industry, what they have to do, they have to build the capacities. Building capacities means that they have to expand, and for expansion, government, institutions, and many of the investors will have to infuse money in that particular industry. So capex is quite important. Now, one thing you have to look towards it, that there are two type of institutions. If I talk about the capex, what are these two type of institutions which invest? One is foreign direct investment. What does foreign direct investment do? They never buy up the equity. What they do, if they come in a particular country, they select a particular industry, they build a particular plant and the manufacturing setup in that particular country, and they carry on the business for that particular industry. And they have a huge control in a particular business because they manage the business operation of a particular industry. For example, in India, for the EV segment, you have also read that Mercedes has also collaborated with Tata. Mercedes have collaborated with Tata. It is a joint venture deal. What they are doing is they have put up a manufacturing setup in a particular location in India where they will be manufacturing EV cars with the brand name of Tata and Mercedes collaborated, and they will put up a brand name which will be announced later. So these type of investments is known as foreign direct investment. And the second one is foreign institutional investment. It means FIIs. Everyone has heard about the FIIs in the past 6 months because there was a huge hype that FIIs have infused out the money out of the Indian markets, and Indian markets have strike down towards the negative era from the last 4 to 6 months. So it is quite true. So the reason behind covering this FDIs and FII part, as an investor, what you have to do is you have to look towards the investments. And how you have to look at, you have to look in a perspective that FDIs are much more participating in a particular industry than FIIs. The reason behind is quite simple, as we have seen in the recent days. FIIs can pull out the money from the market at any point of time. But FDIs who are managing the business in a particular industry or a particular country, it is not easy to infuse out the money because they are managing the money, they are managing the markets. And when FIIs are pulling out the money because they don't have to manage the business operation, what FII does is They directly put money by buying the stakes and equity of a particular company. And as and when they want to book their profits or enter into the different market, they infuse out the money, as we have seen in the past recent months, that FIIs were pulling out the money. So FIIs are the people who pulls out the money very easily, and because of this pulling out, there is a huge domino effect in the particular market, and the markets fall down. So it is quite important that FDIs should quietly be more participative in a particular industry. So you have to look towards it. Okay. So is there any doubt? Is there any doubt in the audience if I talk about these 2 points? If no, then please give me an answer in the Q&A part or chat part so that we can continue further. I think you all are enjoying this session. Okay. Okay, Miss Anita, what is your doubt? Can you please cover it up? If it is big, then we can move forward in the end. Okay. No. Okay. Okay. Got it. Okay. Let's continue further. Let's continue further. There is no doubt as of now. Okay. The question which covered of that, if I talk about the particular capex part in the case of FDI, you should just think a particular logic. FDIs have higher stakes than FIIs in a particular industry. Stakes is not mean. I'm not talking about the stakes as of equity. Stakes means the amount of return which FDIs are wanting than FIIs. Because FDIs are putting all their money in a particular business, their assets, their workforce, their plan, their strategy to operate the business. So if I talk about the FDIs in a particular industry, if there are much more FDIs in a particular industry, that particular industry will boost much more than the investments in FIIs, because FIIs have a tendency to pull back the money out of the market. Because of this, the growth slowdowns in a particular. That is the main reason FDI should be much more preferable in a particular industry. Now, if I talk about the third most important part, that is government policies, and this is one of the most important aspects. If I talk about, so I will be also giving a small example. You would be connecting the dots very logically. So if I talk about the government policies are generally announced in the government budget. Okay, the fiscal policy which is announced by mostly by our finance minister as of now, Nirmala ma'am. So if I talk about the government policies, governments are the biggest influencers in a business, because when they announce something, when governments announce something, it depends on it is a positive or negative thing. That industry gives a huge volatility, either upside or either downside. So they have the power to make policies and budget for a particular industry. And government have the power to restrict the capex and investors in the particular industry. For example, if government announces that in this particular XYZ industry, the FIIs are not allowed, it means that FIIs are not allowed and they would not be able to put money in that particular. So they have a particular power to stop most of the investors to invest, or give a huge bridge to come up and invest in a particular industry. That's the reason we have to look towards the government policies, which by which the industry gets a favor. For example, in an industry, if a government don't want that industry to grow up, what they will do, they will put up too many barriers in a particular industry. For example, if I talk about the last election in 2024, what happened, you can also watch it in the Google. That government announced that ethanol is the manufacturing of ethanol from sugar is banned, okay, in India, and they have just did it for the temporary basis, and it was done before the elections. It was done before the elections, the last year elections, before 1 or 2 months. So what happened when this news came up in the market, that ethanol blending is not allowed with these sugars, then all the sugar stocks fell down. The sugar industry has seen a downside because of this news. As soon as government won the election last year, what they have done, they have removed that ban. What they have done, they have removed that ban and announced that as of now, we are removing this ban of ethanol, and all the industries can manufacture the ethanol from the sugar. Okay. So we don't know the real reason that why they have done that, but what government has told to the public is that because of the demand in the particular country of sugar, we can see that there is very less supply for the sugar. Okay. If I talk about the Indian consumption, the consumers who are consuming food in India, Sugar is one of those commodities which are used in a regular basis, if you all agree, in our household, in my household, in each and every one household in India. Sugar is a very important element. To cover up this demand, there should be a supply of sugar. There should be a supply of sugar. So what government has told to in a public media, that in India there was a less supply of sugar. So if there will be an ethanol blending from that particular sugar, it means that if I talk about the consumption demand of a sugar, it will go down. People will not be able to consume this sugar because there are very less quantity available in the market. And because of this, the price of sugar which we consume will shoot up. And due to which they have done a temporary ban in ethanol blending. So these are some of the government policies and barriers which government does on a frequent basis to control a particular industry. So this is also one of the important points. And all these points which I am sharing with you will be available in a one particular website which I will be showing you in some time after completing this session. So please attend this webinar till the end. The fourth one is global rankings. What do you mean by global rankings? So believe it or not, if I talk about the global rankings, in the era of global competition, we can see that all the nations are participating in global trade. It means that in each and every industry, one of a particular nation is leading. Okay. If I talk about the renewable energy, India is, I think, in the fourth position in the all over the world. Okay. So what we have to see this, any of the industries which you want to invest in, the global ranking should be within the top 3 or 4. Within the top 3 and 4. These global rankings are mostly based on few parameters, that is nation's capacity, how much a particular nation has a capacity. Second one is geographic conditions, okay, where a particular nation is located and how that particular geographic condition gives a good advantage rather than other nations in a particular industry. The third one is cultural demographics. Cultural demographics is quite important in a particular industry because people also consume a particular product or service, or they participate in an industry as a consumer because of their culture. Okay. So the more the nations rank, the more they serve other nations and they grow more. Okay. Because when a particular industry is ranking on a particular industry, the particular nation is ranking on a particular industry, it means that other countries will have an import from that particular industry. For example, if India is leading in the tea industry all over the world, India generates or cultivates tea as compared to much more other nations. I'm just talking about the raw example. Okay, if they are producing much more tea than any other nation, it means that much of the global consumer will come to India to buy that particular tea. So here also industry gets a good head start to grow in a particular nation. Okay, so we have covered all the points. If I talk about the selecting industry part, so is there any doubt within any of the people present here? Is there any doubt? Is there any doubt? Should I continue further? Please just type yes or no in the Q&A so that I can continue further. Please type. Okay, let's continue further. Let's continue further. Now we have learned how to select a particular industry. Okay, so I will be making it quite easy at the end of a particular Q&A session by showing you the primary source where you have to look towards this data. The second part which we will be covering is value chain. So everyone has heard that what is a value chain, and many of us don't know what is a value chain. Okay, what is a value chain? Value chain means there are multiple sectors which creates a value in a particular industry. Okay, there are too many sectors. So what you have to do, you have to select those particular sectors which provides the highest value and contribution in a particular industry. We cannot select those sectors which have very less amount of participation in a particular industry. And that's the reason why it is named as value chain, because you have to follow up the whole value chain to analyze a particular sector which can give and contribute much more in the future. Now, what you have to do is in a particular industry, when you are selecting a particular industry, let's say automobile industry, you have selected automobile industry to invest in. What you have to do is you have to list down all the value chain. Okay, you can use any of the analytical tools. You have to list down all the value chains. What are the value chains in an automobile sector? two-wheeler, four-wheeler, passenger vehicles, commercial vehicles. These are the value chains and sectors. If I talk about EV also one of the value chain in automobile sector as of now. So these are the value chains. Now, after listing all those value chains, you have to look at which value chain can give you or contribute much more amount of growth in a particular industry. Now, there are some of the checkpoints which you have to look, which I will be discussing as of now. Those checkpoints are the parameters on the basis of which you should look towards the value chains and its contributions. What are those checkpoints? The first one is growing demand. Now, when you list down a particular value chain anywhere in your notebook or on Excel and anywhere, what you have to look is you have to see that the particular sector's demand is growing. It means that any of that particular sector, if I talk about one sector name as two-wheeler, you have to look at what is the demand of two-wheeler on a current basis, and in future, how many people will have a two-wheeler in India. Okay, what is the growth pattern in that particular service or a particular product? That's the most important factor, because the more is the demand, all the institution and government will do capital expenditure to fulfill that demand. Because if I talk about let me give you a raw example. Okay, if there is a demand that in India by 2030 1 lakh people will use two wheelers. Okay, 1 lakh people will use two wheelers, and from that 1 lakh 80,000 people, from that 1 lakh 80,000 people will consume the will use the two wheeler in the form of EV, electric vehicle. It means that 80% of people will use EV as compared to other type of two wheelers. It means that now government and most of the institutions know that they have to invest in EV. Okay, they have to invest in EV, and what they will be doing is they will be doing it in a form of capital expenditure. They will do it in a form of capital expenditure. They will be setting up a manufacturing plant so that they can cover up the demand of the particular EV in the future. So these are the examples which you have to know and keep in the mind if I talk about the demand which will be growing in the future. The more will be the demand, the more will be the supply. And to cover up the supply, the institution have to invest in a particular industry. And in few years, you will see a boost in a return in a particular industry. The second one is the most profitable sector. When we list down a particular industry, it might happen that one sector can fetch 20% of profit margin, one sector can fetch 50% of profit margin, and one sector can fetch only 5% of profit margin. So what you will be focusing on? You will be focusing on a particular sector or value chain which will be fetching you the highest profit margin. Okay, the highest profit margin is quite important. If I talk about the renewable energy, as of now we don't know which of a particular industry will provide highest profit margin. But if I talk about the automobile sector, we know that the highest profit margin currently will be lying on electric vehicles. The next point is very less competition. In the culture of two number of competition in a particular market, you have to look towards the particular industry or a sector, but there is less amount of business who are servicing this or contributing in that particular industry. Because the less amount of competition, it will boost the returns of a particular industry. And secondly, there will be no other competition in the market will be serving in the particular industry. If I talk about the example, you can look towards the telecom sector. There are only two major players in the telecom sector. That is Jio and Airtel. And currently in the Indian markets, you are only able to invest in Airtel because Jio in the telecom space has not listed yet. If I talk about the Vodafone doesn't come up in the competition because they have very less amount of business. So the competition is quite less, and it should be very less if I compare in the another value chain. So we have completed the value chain part as of now. So it is a question from my side that first of all, I would like to know that is there any doubt? Is there any doubt if I talk about the value chain part? Okay. So we have covered up the value chain part as of now, that what should be the value chain and how you have to look towards the value chain, how you have to list down that value chain, So I think this is quite more short way to select the particular value chain. Now the main focus comes up in the part of stocks. So let's begin that how you have to analyze a particular. So first of all, I would like to highlight one thing that what you have to do, you have to uh, you have to look towards some of the things in a particular stock. When you list down a particular value chain, when you have selected the value chain, for example, in the automobile sector, you have selected a value chain, passenger vehicles and EV. These are the two value chains. So what you have to do that you have to list down a particular stock, else that how many stocks are available, and you have to give a category. What are the categories? First category will be the large cap, second will be the mid cap, third will be the small cap. So these are the category which you will be listing up down. After this, what you will do is you have to identify the red flags. Okay, I'm not talking about the fundamentals. I'm talking about the red flags. What are the red flags? What are the red flags? These are the red flags. Decrease in sales and profit. 1 minute. Decrease in sales and profit. Earning majorly from other income. Increase in debt. Increase in cost like operating financial or depreciation. Management fraud. Internal disputes. Faults in product and services. Legal issues and etc. Now, why you have to search this? Why you have to search this? There is a huge reason. Okay, if a particular stock will have a red flag means negative issues or disadvantage. With that particular stock, you will be getting it in discount. Understood? Now you would be thinking that by this type of ideology we should have at the time of investment. What good investors do? Good investors look towards the green flags. Okay, good investors do look towards the green flags so that they can buy a particular stock. But great investors look towards the red flag. Why? Because great investors have a tendency to buy that particular stock in a discount. They never want a particular stock to buy in premium, because as lower they buy a particular stock in a low price, they have higher margin of safety. Okay, they have higher margin of safety. But there is another question from your side as well, that why I should invest on a particular company whose sales and profit are decreasing? Why I should invest in a particular company where there is an increase in debt? Why I should invest in a particular company where management is a fraudulent? Now you just have to identify the red flags. The next thing which you have to do is you have to look towards some of the things which can highlight and indicate that these particular red flags will be improving in a particular future part. For example, let me show you with the example. For example, if I talk about the sales and net profit, okay, if I talk about the sales and let it be net profit both, okay, it is a raw example. For quarter one, there was 100 crore sales. Okay, there was 100 crore sales. In quarter two, it was 120. In quarter three, it was 150. In quarter four, it was 155. Okay, and in the next quarter, it fell down to again 90. Okay, it fell down to 90. Now the main thing is that you can identify a red flag. From year to year, there was a 20% increase. From year to year, there was 25% increase. From year, it was very less amount of increase. It was very less amount of increase, around 3%. Around 3% to be not to be exact, but close to 3%. So what you have looked towards, there is a decrease in sale. There is a decrease in growth. The sale has increases, but the growth has decreased. This is a red flag which you have identified. Another one, now the growth has been vanished and it is degrowth. There is a degrowth. There is a decrease in sales. So this is a major red flag. Now, in this particular red flag, you cannot identify that this particular red flag will continue in future. When this result will be announced, the particular stock price which will fall down. When this particular result will announce in public that this particular company has the sales of this particular company has decreased and the stock of the price of that particular stock will fall down. Now the question arises here is that after falling up in a huge percentage, is this stock good to go in the future? This is a question. Now what you have to do is you have to look towards some points and you have to know that these particular things, this 90 crore, what was the reason that this occurred, that this data occurred, 90 crores? From 155 crore to 90 crores, what was the particular reason? You have to find a reason in that particular red flag. Find a reason. Find a reason. If you get a valid reason that because of these reasons, this particular stock fell down. The second most thing what you can do is, this is a very important point. Please note it down. You can compare these data with other competitors. If all the competitors' sales have fallen down, it means that there is no problem in this particular stock. There is a problem in the industry, and it is a short-term saturation. It is a short-term saturation. It is a short-term setback. Here, investors look towards the advantage that these setback can advantage the investor to invest in this particular stock in discount, because all the stocks in that particular industry has fall down, and in the future again this will get a good head start or tailwind or upside, any of the thing which you can invest in. Again this sale will increase, and on a particular day when this sale will increase, their investment returns will be boosted. Are you getting my point? What I'm trying to say? You have to look towards the
Jit,
red flag.
Jit, we have got a question actually. Maybe it's a relevant one. The question is, what percentage growth is considered as a good growth?
Okay, so thank you for asking this question. I was going to clarify it in the next parts, but if I talk about the percentage growth, there is not a particular amount of percentage. If I talk about the stocks, what you have to do, you have to select the stock which have the higher amount of growth. Okay, if for example you have three industries in front of you, one industry CAGR is 10%, second one is 15%, and the third one is 20%. So for you, 20% is quite good. Okay, so there is not a benchmark set up according that what amount of growth, but you have to look at which is the highest amount of growth which is available for you to invest in the particular industry. The higher the particular growth percentage, the higher the returns will be boosted in the particular portfolio. Okay, so I hope I have clarified your doubt. So please give me a confirmation. Please give me a confirmation if you got clarified, or still you have doubt. You can ping just now.
I think we got a confirmation.
Okay, let's continue further. So the next thing which I was going to ask, that the main point is that good investors look towards the green flags and great investors look towards the red flags. Because let me connect you a dot. For example, you are going in a shopping mall, okay, for having a shopping, and what do you look? Do you look towards the discount while shopping? Because according which my tendency is that I will be always looking for a discount. In a particular product. So if I talk about the stocks, we should only invest on the stocks when the stock gets discounted, and the stock will only get corrected and discounted when there will be any red flag coming up. Now the question arises that you have to decide, or you have to know and analyze that the red flag which came up, will it be improved in future? Will sales will again boost up? Okay, is this red flag available on this particular stock, or it is available in all the stocks in an industry? You have to look towards these points, and when you get your answer, you get clarified that now you can enter in this particular stock in a discount to enjoy the premium in the future. You should never enter in a particular stock where there are no red flags, because if there are no red flags, that particular stock you will be getting in a premium. No stocks or any of the thing which have everything good in a particular parameters. There is no stock which have everything good, and if it has everything good, or all the things are in a green part or a positive way, it means that it is not a right stock to invest, because it has already been increased in the past. Now nothing is left for the growth. Okay, so I hope I have clarified the main things in front of you. So currently, let's open for the doubt session, because I just want to clear up the doubts. And as of such, there are not much fundamentals or every fundamentals to look. You just have to look up the red flags. The red flags is improving. If red flags will be improved in the future, you have to enter in a particular stock. That's the only psychology or thing that you should follow. So let's open for a Q&A. Saraj sir.
Sure. Yeah. I think there is one question. Basically, how this strategy should change based on the tenure in the market, like short term or long term, or based on the risk appetite of the investor.
Mm, the most important thing is that there is never there is never every day to invest in the market. You cannot invest every day in a particular stock or in a market. Okay, there is some point of time investors should wait for a right time to get the stock discounted. If I talk about the 2024, mid of 2024, many of the retail investors were entering in a stock. They were entering in a stock when market was in a bullish phase. It was keeping on increasing. Sensex was around 80,000 points. Nifty was around 25 to 26,000 points. But they never knew that this bullish era can end and a downward trend could be started off. They never knew. And that's the main reason mindset comes up. What's the mindset? At that time, people were excited to invest when Nifty was at 26,000. But now, when Nifty has been corrected, the Nifty has been in the 22,000 levels. Many of the investors, if I talk about specifically the retail investors, they are they have a fear to invest in the markets. But that's the right time to invest in the market when the market has corrected. So if I talk about the long-term perspective and if I talk about the short-term perspective as well, when you invest when the markets are corrected, you will be boosting your returns in the short term as well. You will be boosting your returns in the long term as well because that's the right time you have entered in the market. That's the right price and discounted price which you have bought the particular stock. And thirdly, it will boost the returns and cover it up all the losses when the market will go up in the second phase.
Okay. The other question is, what about the value stocks? I mean, are these applicable to while analyzing the value stocks as well?
Value stocks in the sense I couldn't understand which
Basically,
type of.
the one that are available for much lower entry price, and the fundamentals may not be strong, but even then, whether people can look for the red flags, even in that case, and be able to keep it for a longer term and make some profit out of it.
As I said earlier, uh, great investors look towards the red flags and they get the answer that what is the reason of these red flags. When they get to know about the reason, they find that answer that is this reason temporary? The first question comes up that the reason is temporary or not. Second thing, if it is temporary, by what time there will be cover up for this particular red flag, or this red flag will be improved. So when the investors identify the time frame, what they do is they set up a target at that particular time frame. They invest in the market for that particular time. So that's the reason when we get a particular stock in a discounted phase. For example, let me talk about Polycab. Polycab has fell down. If everyone remembers that Adani Enterprises have announced that they are entering into the cable and wires business, and all the cable and wire stocks fell down. Okay, it gave a lower circuit 10%, 13%, 14%, 7%, 8%. All the cable stock fell down. If I talk about the example of Polycab, it touched a low of 4,700, and you can check towards the price now. You can check towards the price now. It is around 6,000. From 4,700, it has covered up 6,000. Why? Why? Because most of the retail investors have exited. Most of the retail investors would have exited when the stock fell down. But what great investors do? They got an advantage to enter at the right particular price. They got a good discount of 10 to 15% in that particular stock. And when they entered in the lower price, now you can look towards the price. And this is not, I'm not talking about a very long term. Polycab has fell down just in the last 2 months, in the time frame of last 2 months. So in these particular last 2 months, the stock has corrected from 4,700 levels to 6,300 levels. You can look towards the technicals as of now. Okay. So that's the main reason you have to take the advantage of these shortcomings. Okay. And these particular news was not only about the Polycab. This affected the whole wire industry. When it was affected the whole wire industry, then we cannot say that it was a particular reason of Polycab only the stock fell down. The reason was the market reason, not the stock reason.
Next question. When market corrects, how come all experts say that all stocks are overvalued? Where do fundamentals go for a toss in this scenario?
If I talk about the valuation part, there are two type of returns in the market. Okay, one return is speculative return, and the second one is investing returns. One is speculative returns, the second one is investing returns. What do you mean by speculative returns? Speculative returns is based on the volume. Speculative return is based on the people trading it in a particular shorter time frame. Okay, if I talk about the stock market, particularly in the Indian markets, we can see that there is a sudden increase in a particular price of a particular stock, and the only reason is because of the people trading in that particular stock. So those particular returns which are speculative, which comes from the trading, is a temporary return. When a particular stock goes up on a constant basis, it creates an all-time high, it creates a new all-time high. You should never enter in that particular stock, because there is a small saying that anything which goes towards the peak has to fall down, because there is no area rather than falling up down in the peak area. When you reach in the top of a particular mountain, in the toppest point, in the highest point of the mountain, there is only one way to go up, that is downside. There is no other way. So you have to wait for a particular downside. And when the markets are continuously in the bullish way, if I talk about the Nifty and Sensex last year, it was continuously increasing, and there was no particular good reason that why it is increasing. So it was clarified that one day this market will be corrected. Okay, and remember one thing: when the market is overvalued, you can write this down. When the market is overvalued, it will just need a very little reason to fall a particular market. But when the market is undervalued, no big reason can give a correction in the undervalued market. Okay, so I hope this is clear. Your doubt is clear.
Sure. Just one point to all the participants. It need not be just on this topic. If you have any other questions that you want to ask in general about the stock market or any specific ask on a particular stock, that also can be entertained here. So, of course, around this topic, if you have more questions, please go ahead. If you have other questions related to market as well, you can feel free to ask them.
You can ask about any particular stock. What should be the entry price? I am just creating it in the perspective of ask me anything which we had on the last session. You can ask it on any particular stock. We will consider up.
How is Reliance Power for the long run?
So let me look towards the fundamental. I am just sharing my screen, and so it is a appeal to each and every member to stay attended and be the part of the session till the end, because if someone is asking on a particular stock, it might happen that it also gives you a right opportunity to invest in that particular stock as well. So please stay tuned, and I will be showing a particular website where you can watch all those data. That part is left. Let me share you the screen. Just a minute. So is my screen visible?
Just coming up, not fully visible yet.
Now?
Yeah, it's here. Yes.
Can you please repeat the stock? It was Reliance Power.
Reliance Power, right.
So there was a huge gap up, and if I look towards the technicals, okay, got it. So if you look towards the stock, it is continuously rallying up, and this is the zone which it was overbought. So I think this particular stock needs a bit correction, but there are two levels which should be noted as of now. This is not right time to enter. If this breaks the level of, if I talk about the daily charts, let me look towards the daily charts. Okay, if this breaks the level of 46, you can move forward with the level of 50 or 54, and if it breaks down towards 43, mark the two levels, 46 and 43. Okay, if it goes down till 43, you can wait for a good correction till 37 to enter, and if it goes up and breaks the level of 45, you can note and enter in a particular stock for upcoming target of 50 and 50. These are the two levels.
Okay. Next question is on BEL. What's view on BEL at current pricing?
Okay, BEL is what we have also given to our premium members, and it shooted up. We have given on the level of 315, and currently it is 344 in the short term only. We have given it in the last week only. So currently, if I talk about the BEL, BEL is at the all-time high part. Okay, it is at the all-time high. So currently, you have to look that in the daily. If I talk about the daily charts, it is currently in the all-time high, and according to me, it will be moving downwards towards the correction because people will start booking up the profit. And when the investors want to invest in the particular stock, what they do is they want the stock to fall down. Now, if I talk about the results, in few days the result of BEL will be declared, and if I talk about the last result, it saw a huge number of growth. And again, if I talk about, let me look towards the fundamental. I have to just look towards one of the fundamentals first. Please stay tuned. If I talk about the fundamentals, just a minute. Let me open the screen up. If I talk about the quarterly results, okay, there is a good thing that after falling of sales and net profit in the December quarter, in March quarter, it has already grown. It has already given a growth, and bail results have already been declared. There was a time delay. I think they have announced the results earlier before the announced date, and currently, okay, currently this stocks needs a correction, and I hope it will be corrected around at least 330, around 330. So you can wait for a correction. And if I talk about the upside, if this particular stock crosses 350, then you can enter. It means that it will confirm that no correction is needed in that particular stock. Investors find this stock in a right time to enter. So you have to wait for two levels. The first one is 350 to enter. Second one is reversal from this point of time. Reversal means the stock started getting corrected from 345, 346, these type of levels.
Uh, okay, there's also one question on how do you really evaluate the IPOs considering all the previous points that you mentioned? What are the kind of points to be kept in mind while evaluating
Okay.
IPOs?
The simple ideology for the IPO is that when the market is in bullish, when the markets are bullish, you can go for any of the IPOs. When the market are bearish, don't go for an IPO. Because I have seen from my experience that having good fundamentals is not necessary in the IPO, and there is a psychology in the Indian markets. The retail investors doesn't look towards the IPO in the form of fundamentals. They look towards the bullishness in the market. When the markets are bullish, investors, retail investors are happy to invest in that particular IPO because in India, IPO is seen as a lottery. If I correctly use the term, all the retail investors look at it as a lottery. So you have to play with the psychology. Your fundamentals will not be work. You can see that when market is in a bullish phase, you can invest in the, you can go for an IPO, you can apply for an IPO. When the market is in a bearish phase, you should avoid the IPOs. You should avoid the best IPOs also.
Next is your view on Trent stock.
Okay, let me open. Okay, Trend is currently in the consolidation phase or the sideways market. Okay, after falling down, after showing this downward trend, what it has done, the you can look towards this. Let me clear it off. Okay, what you can see is that this stock is particular in a consolidation phase. So here we do not have a particular idea technically that this will particular fall down or go up. So what you have to do, you have to wait for two levels again. The first level is let stop, let give the stock time to cross 5,580, 5,580 to enter in this particular stock. Okay, before this particular level 5,580, you should avoid this stock.
Okay. नेक्स्ट क्वेश्चन फंडामेंटल स्टॉक को लॉन्ग टर्म में हेज करके कैसे प्रोटेक्ट करना सकते हैं सॉरी प्रोटेक्ट कर सकते हैं
hedge कैसे प्रोटेक्ट कर सकते हैं okay the best thing to hedge a particular stock market is in the long term is not derivative. It is investing in other commodities like gold, silver, bonds. Okay, if you have to decrease your risk, what you can do is for the long term, rather than investing only in the long term in a particular stock, what you can do is you can also diversify your portfolio in other assets like gold, silver, bonds. Okay, you can invest in real estate. You can invest in ETFs. Okay, so these are the hedging techniques. If I talk about currently, many of the investors and in India have also hedged their positions in gold by investing in gold. When market was in a bearish phase in India, people were investing in gold so that they can avoid those stock market risk and boost the returns of the gold so that the returns can cover up the risk of the stock market.
Okay, I think there's another question which is a little broader sense. Any other stock recommendations? I don't know whether you want to really give it as part of the session or as part of your recommendations, but this is a question.
If I talk about the recommendations, we cannot directly recommend you a particular stock because SEBI doesn't allow us to do so. I'm willing to do so, but SEBI doesn't allow us to do so on a trial basis. So what you can do is I've also prepared a subscription plan for each and everyone, which Sarath sir will continue to say, and it is a very good plan who want to start a journey with us and has to look towards how we research in the markets. So Sarath sir, please continue.
Sure. You want to talk about a subscription now, or we'll continue the other questions?
I think the questions has been
Yeah, there's
okay.
no,
There are
no.
some more questions. There are some more questions.
Yeah, there's
Okay,
one more.
let's complete the section, the question
Yeah,
parts, and let's move towards the
sure.
website. The website which I will be showing it to
Yeah,
the
yeah, sure,
audience,
sure.
and then we
So
should.
the question is how to exit on stock which are entered due to fundamental. How to exit? So how to
Okay.
exit on
How, okay.
which are
Okay.
entered due to fundamental.
Exiting parts should be based on the technicals. Okay. Exiting parts should be based on the technicals. Remember one thing: the stock will continue to give you profits till the markets are booming, till the Nifty is booming. When Nifty starts the downward trend, it's the right time to exit from your portfolios. Many of the people says that you should keep your portfolio for the long term. You should not exit. But according to me, to because the control of your portfolio is with you. At the time of 25,000 levels, 26,000 levels, it was a right time to exit in a particular in your particular holdings. Okay, so that you should get saved and secured from that 10 to 15% retracement. Okay, and after you get secured from that 10 to 15% retracement, what you can do is you could reanalyze those particular stocks, or you can enter in that particular stock when the markets get corrected totally and they again start a bullish reversal. That's the simple strategy.
Okay. I think those are the questions that we had. Probably is the time you talk about the subscription that you're offering on Signalz and what exactly the attendees get to know about the subscription and what they're going to gain from this.
Okay, we have one more question. What should be the stop loss? For the long-term investment, there should be no stop loss. Why? What is the reason? Because we are mandated to give a stop loss. But according to me, for the long-term investment, everyone knows that for the long term, you are going up for the returns of 15 to 20% at least. More than 15 to 20%, as many of the investors also target 20 to 30% or 50% in the long term. So according to me, any particular stock will not fall down more than 5 to 10% on a particular day if there is no reason to be falling off down. So I think there should be no stop loss. You have to monitor your portfolio on a daily basis. If it keeps on falling off down, then you should exit that particular stock. Okay, but there is no particular stop loss that you should have to keep it in mind. Only in the trading part you should look towards the stop loss, but for the long-term investment you should not look towards the stop losses. If no SL, then I was at Sonata at 700. That's the only thing which I'm saying. You have to monitor your stocks. You have to monitor your stocks on the daily basis. I don't think that on a one single day 700 to 400 came up. Okay, it took time from 700 to 400. It took time, I think. So I think if you are talking about 700, you should exit in a particular stock when you think that markets are decreasing. I've told the same thing. If Nifty is continuously decreasing, there is a huge downside started in Nifty. Then you should just empty your portfolio at whatever price you get. Okay, because you know that in the future it will be keeping on decreasing. How can I avoid? You cannot avoid short-term retracement. You cannot. The long-term investment totally depends on how the market are reacting. Okay, if I talk about the 26,000 levels, when it started falling, okay, when it started falling from 26,000 to 25,000 level, it came down. because everyone knows that not in a particular day Nifty fell from 26,000 to 20,000, 22,000 level. First it went down to 25,000, then 24, then again it went up to 24,800, then 24,000, then 20. The market will give you an opportunity to exit. You have to analyze the right time. Okay, many of the investors should have exited. The retail investors should have exited at 25,000 level. But what they were thinking, that let's be optimistic that this is a short-term retracement. Why? At 25,000, if it is a 1,000 points retracement, so it has much more chances that it will fall more. Okay, so you have to analyze the entry and exit points according to the Indian markets, according to the Nifty and the trend in Nifty. You have to analyze the weekly charts of Nifty. That's the reason we are here, because what Foxes Financial do is we gives you update on a daily basis that you have to avoid the stocks as of now. You should empty your portfolio as of now. We give Nifty and Bank Nifty chart analysis on a daily basis. That's why we are here, to cover up those updates for you, to cover up those all the types of market updates, stock updates for you.
I think there's one more question on Jubilant Foodworks. It's been
Okay.
600 zone for a long time now.
Okay, as you can see that this red zone is the resistance. Red zone is the resistance part. We can see that in a particular range it is currently trading. So now what you can do is you can see that this is the main reversal point where it got reversed from 726. It fell down to 648. So again now you have to wait for 726 to enter, or when it crosses 730. Okay, you are taking a 4-point margin as soon as, because according to me, it is a high chances that this stock can start a reversal from this point of time. Again, it is a high chances. In a resistance point, you should never enter. You should wait for a good breakout. After a breakout of 730, you can enter in Jubilant. And for this, you can give a target of 800 and more than. Okay, any other questions, sir?
No, I think that's it for now. I think
Now,
yes, sure. Go ahead.
hope everyone is able to look towards the screen.
Yeah.
Okay. So this particular website name is ibef.org. I'm typing it up in the chat box so that ibef.org. Okay. So this is the supreme place where you can look towards the fundamentals, and I can just give you a brief. So this is the industries which are listed here. If you click towards the industry, you can look towards the industry. These are the 45 plus industries which are present. What you can do is, for example, you want to get a research on renewable energy. You can click on renewable energy. 1 minute. Industry, renewable energy. I think there is some glitch here. Okay, let me share the screen once more for you. Please wait. If I talk about the industry, now what you can do is you can click on any of the industries here. Okay, this is the part of renewable energy. So you can look towards this, that India installed renewable energy capacity is expected to increase to about 170 gigawatt by March 2025 from level of 135 gigawatt. Now from this 135 gigawatt to 170 gigawatt, you can calculate the metrics of expansion, that till how much expansion will be done by from 2023. Okay, you can calculate the percentage from here. Another thing, what you can look, you can scroll down, and these are the small points which are given that India is planning to invest rupees 67 lakh crores, $800 billion in green hydrogen, clean energy, semiconductor EVs. Secondly, what you can do is you can download the industry report from here. 1 minute. Let me download it. Let me download this. 1 minute. I will be showing you a small PDF and log in. There is a delay from the particular website. Please stay tuned. Okay. So this is the PDF which you will be getting from their site, and this is a whole amount of research done on the industry. This is the industry research, not the stock research, and you can see that they have pointed out a huge number of growth points. India is surpassing climate targets with 100 gigawatts of solar, 47% of non-fossil fuel power, and 36% reduction in emissions. These are the metrics which you will be using to analyze increasing investment. The union budget allocates rupees 20,000 crores each of for nuclear energy and PM Surya Muft Bijli Yojana. And BPCL plans to invest. They see there is a name of a particular stock. BPCL plans to invest $1.19 billion for green energy, targeting 2 gigawatt by 2025, 10 gigawatt by 2035, and 7,000 EV chargers in 5 years. Advantage, competitive advantages, increasing investment policy support. All the points are given up here. And you can also find the CAGR here, or you can calculate it manually. CAGR can be calculated manually based on the metrics which they are. You can just calculate the amount of percentage and the time frame of it. The second one is the renewable energy sources. What are the sources in the hydro energy? What are the different form of particular industry? So these are the value chains. These sources are the value chains. There are wind power companies. There are biopower companies who are working for biopowers. There are some companies which are contributing in solar power. There are some companies which are contributing in small hydropower. So these are the value chains. Which value chain can contribute in the future? You can see. Here is the CAGR. See, here is the CAGR given. 15.29% expansion in installation and the capacity of India. What was the installed in the past, and what is the future outlook? The second thing which I would like to see is what is the demand of electricity? What is the electricity generation? How much electricity is generated from renewable? The another metrics which is shown here. The another metrics that how much generation from renewable energy India is planning to generate. Another thing it is which is given here. The second one is that which particular state is using much more capacity of renewable in India. Rajasthan, Gujarat, Karnataka, they have listed down each and everything. What is the growth of hydropower? Okay, what are the strategies? Green cities, because India is currently working on the green cities and where they are planning for zero pollution and emission. The second thing is if we scroll down, we can see some of the news and part that what are the government commitments, what are the investments in the renewable energy in the recent times, what are the mergers and acquisition. Okay, on November 10, 2023, multinational pharma company Dr. Reddy announced the acquisition of 26% of Renewable Energy IX Private Limited equity share capital in. So it means that company is also planning to manufacture its medicines to green energy. The another thing which I would like to show you is what are the FDI investment. I have talked about the investment and capex. Now let's see what is the FDI equity inflow. I told you you will get all the data in a very in a one particular resource. So these are the foreign collaborators, and these are the Indian companies. These are the listed companies which have invested, and these are the places they have invested. Okay, if I talk about India, if I talk about the opportunities, all the things are listed here. What is the potential of India? I think there, in solar energy, there is the huge number of potential. If we talk about the multi-diversified value chain. Now, these are the stock which are, these are the agencies and industry contacts. This is not currently for you. So this is the end of the presentation, and you can see that in this particular PDF, you will get each and every data presented. So it becomes quite easy for you to select industries and reading this. Secondly, what you can do is you can list down, you can download all the PDFs of all the 45 sectors. What you can do, you can merge that PDF in one particular file. Third thing, you can give it to ChatGPT and tell them to make an Excel sheet by analyzing all the data in this PDF. And what ChatGPT will do, they will make an Excel sheet based on your points. If you give ChatGPT to analyze it based on CAGR, demand, and other metrics, so what ChatGPT will do, it will take the data and make you all the list. So this is the second step which you can use. This is the good use of ChatGPT. This is the good use of ChatGPT because AI is built to reduce your work effort. So you can use AI to analyze and summarize all the data rather than reading it one by one. Okay. So I hope everyone got this, and they like this particular website, and particularly I am also using this particular website to filter out the industries to invest and filter out the stocks to invest. This is one of the best website which I have ever seen. I don't have to move towards the other data and website to look towards. So this was the end of the particular presentation which we tried to present it to you. Hope you like this particular session, And I would like Saraj sir to continue from here.
Sure. Thanks for that, Jeet. I'm just actually sending this link of IBEF. Right. So thanks a lot, Jeet. It was very, very informative sessions. Not just the topic, along with that, you also took many other questions relevant to stocks and other topics. I think I'm sure the participants felt this is very, very useful session. We look forward to having more, frequent sessions from you, as you said, where participants can come and clarify their questions and doubts. Thank you so much for your time. And thank you all the participants for being with us for throughout the session. And I'm sure you liked it. And we actually look forward to having you in our next sessions as well. And yeah, that's it for now. And thank you so much. Good night.
Thank you. Thank you, sir.